Something extraordinary is happening in the global financial system right now, and almost nobody is seeing it because it is completely hidden behind war headlines, oil price spikes, and the kind of fear-driven noise that causes retail investors to make the worst possible decisions at the worst possible moments. I am going to break down everything in this video: the macro signal, the chart levels, the XRP technical picture, and the one number that nobody is talking about that changes the entire narrative. But I need you to do one thing before we go any further. Stay for the full video. Because the piece that changes everything is not at the beginning, it builds across every section, and if you leave before the end, you are going to miss the most important part. If you get value from this kind of calm, precise, data-driven analysis, hit the like button right now before we even start. It takes 2 seconds, and it genuinely helps this channel reach the people who need this information most. And if you are not subscribed yet, hit subscribe and turn on notifications, because the market is moving fast, and you do not want to miss the next breakdown when the confirmation signals arrive. Now let's get into it, because what is building beneath this market right now is one of the most powerful setups I have seen since 2020. And the last time this specific setup appeared, Bitcoin went from its low to its top in a move that changed the financial lives of every person who was positioned and held through the noise. Stay with me. Welcome back. This channel operates on one principle: calm, precise, data-driven analysis. No emotional reactions to war headlines, no panic when oil spikes, no euphoria when crypto pumps. What we do here is read the structure underneath the noise and position accordingly. If that is the kind of analysis that helps you think clearly when the market is at its most irrational, subscribe right now, because what I am about to break down today is the single most important macro signal that is actively moving right now, and it is the one thing that almost everyone watching war coverage and oil charts is completely missing. Let's get into it. Let me start with the thing that matters most, because it is the key variable that moves entire markets. And right now, it is going completely unnoticed, while the war coverage consumes every headline: global liquidity, the global M2 money supply, the total amount of money in the world that is available to flow into assets. Because here is what the data shows right now, while everyone is watching oil and Iran. The global M2 has surged to approximately $137 trillion, one of the fastest expansions since the COVID-19 liquidity boom. The US M2 has quietly climbed back to $22.3 trillion and just hit a new all-time high. The pace of expansion is the fastest since mid-2022. China's M2 contribution alone is sitting at approximately $47.7 trillion and still expanding. Russia, the EU, India, South Korea, all increasing their money supply simultaneously. Every single major central bank on the planet is in monetary expansion mode at the same time. Drop a comment right now with the word liquidity if you have been tracking this metric, because I need to know how many people in this community are watching the variable that actually drives bull runs instead of the war coverage that is designed to distract you. Now let me show you why this specific data point is the most important thing in the entire crypto market right now by going back in history and mapping the relationship precisely. Global liquidity expanded dramatically in 2016 and 2017. Bitcoin went on its first major parabolic run. Global liquidity expanded massively in 2020 and 2021. The COVID monetary response, trillions in stimulus, central banks globally cutting rates to zero. Bitcoin went from roughly $4,000 at its March 2020 low to $69,000 at its November 2021 high, a 1,600% move, a $65,000 price change on a single asset. Global liquidity contracted aggressively in 2022 as the Fed began the fastest rate hiking cycle in modern history. Bitcoin collapsed from 69,000 to 15,000. And here is the critical data point that ties all of it together. Global liquidity dried up before every single crypto bear market, and global liquidity expanded before every single crypto bull run, without exception, every time. This is not a coincidence. This is the mechanical relationship between money supply and asset prices. When there is more money in the global financial system than there are productive places to put it, capital flows into risk assets, into equities, into real estate, into commodities, and into crypto. The sequence is reliable, consistent, and documented across 3 complete cycles. And right now, Fidelity Digital Assets, one of the most credible institutional research houses covering this space, published analysis stating that bullish phases for Bitcoin typically align with times when M2 experiences growth, and that with a new global monetary easing cycle underway and the cessation of the Fed's quantitative tightening program, it is probable that M2 growth continues to rise throughout 2026 and serves as a positive catalyst for Bitcoin's price. That is not a retail Twitter account making a hopeful prediction. That is Fidelity's institutional research desk describing the same macro relationship I just outlined using the same historical data. The 2020 playbook is running again, and it is running on a larger scale than 2020 because the monetary expansion is happening simultaneously across more central banks and a larger absolute money supply than at any prior point in history. Here is the part that requires you to hold two things in your mind simultaneously, because this is where most people get lost. The same week that global M2 is hitting these levels and signaling one of the strongest macro setups for a crypto bull run in years, crypto is being sold down aggressively. Retail is absent. Fear is at extremes. The war coverage is consuming all oxygen. And most people are concluding that because the price is going down and the headlines are terrifying, the thesis must be wrong. But this is exactly the dynamic that characterized the October 2020 setup before the largest Bitcoin bull run in history. It is exactly the dynamic that characterized September 2024 before the next major expansion. And it is exactly the dynamic that characterized April 2025 before the last significant move upward. In every one of those cases, the market was boring. The retail investors who had been burned were absent. The price was compressing sideways or slightly down, and the underlying macro signal, liquidity expanding, was already running at full strength. The price eventually followed the liquidity. It always does. It just takes time. And the gap between when liquidity starts expanding and when the price fully reflects that expansion is exactly the window that informed investors use to build positions before the move. We are inside that window right now. Comment 2020 setup below if you see exactly what I am describing, because I want to know who in this community is reading the same data. Now let me give you the technical picture because the chart levels here are specific and they matter for understanding exactly where we are in the sequence. The total crypto market cap is currently sitting at approximately $2.43 trillion. The weekly RSI on the total market cap chart is at its lowest level since the summer of 2022, the deepest oversold reading on the highest confidence timeframe in almost 4 years. Let me be precise about what that means technically. RSI at these levels on a weekly chart does not stay at these levels for extended periods. Historically, this is where markets base and reverse, not where they continue to collapse. The technical setup is consistent with a bottoming process, not a breakdown. The specific level to watch for the next directional confirmation on total market cap is a daily candle close above $2.54 trillion. If we get that close and sustain it, the path to $2.65 trillion opens with relatively clear technical structure. Beyond that, the next significant resistance zone is up at approximately $2.85 trillion. Working from current levels, that represents roughly an 18% expansion in total crypto market cap from where we sit right now. That is not a moonshot scenario. That is a recovery toward levels that were being traded as recently as 2 months ago, and it becomes the launch pad for the larger move that the liquidity data is pointing toward. Now let me get specific on XRP because this is where the technical picture connects directly to the macro thesis. XRP is building a floor. The key support zone is around $1.28 to $1.30, with a strong demand cluster that is held through multiple tests. That floor is being defended. But the critical level that separates a range-bound consolidation from a genuine recovery move is the $1.45 resistance zone. Getting above $1.45 and sustaining a close above it is the technical confirmation that the tide has shifted. Above that, $1.50 becomes the next target. And $1.50 is not just a round number. It is the level where the chart structure opens back toward $1.70 and then $1.80, which is where you start recapturing the support zones that held through December of last year. Right now, XRP's RSI is sitting in the neutral to slightly bearish range. That is not a momentum signal. That is a spring that has not released yet. And when it releases, when the liquidity expansion that is already running in the macro data finally shows up in asset prices, the XRP chart has the technical structure to move quickly because the consolidation at these levels has been compressing energy for months. The move from $1.30 to $1.80 is not a dramatic price target in the context of where XRP has traded. It is a return to normalcy, and the macro data says normalcy is coming faster than the bear sentiment currently dominating social media would have you believe. Now here is the Bitcoin dominance piece that every altcoin holder needs to understand, because this is the timing signal for when XRP specifically starts to outperform. Bitcoin dominance is currently at approximately 59%. That number tells you where money is sitting right now. When fear enters the crypto market, capital rotates into Bitcoin as the perceived safety trade within crypto. dominance rises, altcoins underperform. That is the cycle we have been in. But here is what the RSI on Bitcoin dominance is showing right now. It is hitting levels historically consistent with dominance peaks. Every prior time dominance RSI reached these levels, a significant dominance sell-off followed, meaning Bitcoin's share of total crypto market cap contracted and altcoins captured the rotation. When Bitcoin dominance drops from current elevated levels, the capital that has been sitting defensively in Bitcoin does not leave crypto. It rotates into altcoins. And the altcoins with the strongest fundamental infrastructure, the ones with institutional adoption, utility, regulatory clarity, and real on-chain activity, capture the most of that rotation. XRP sits at the intersection of every one of those criteria. When the dominance rotation happens, and the chart says it is approaching, XRP is positioned to capture it aggressively. The question is not whether that rotation happens. The question is whether you are positioned before it does, or chasing it after. Let me address the Iran situation directly and give you the honest structural read, because I want you to have the complete picture, not just the bullish case. The geopolitical risk is real. A 2-week pause does not resolve the conflict. The key variable to monitor is oil. If oil is finding support at higher lows around the $91 level, which the current chart structure suggests, that tells you the market is not fully pricing in a rapid resolution. If the conflict escalates again as the pause deadline approaches, a short-term shock to risk assets, including crypto, is a real possibility. I am not going to dismiss that risk, because dismissing real risks is how investors get hurt. But here is the structural context for that risk that the war coverage is not providing. The Iran conflict is happening against a backdrop of the strongest global liquidity expansion since 2020. The macro tailwind is not paused by a geopolitical event. It continues building. And historically, geopolitical disruptions that drive short-term fear-based selling into strong macro liquidity environments produce some of the most powerful entry points in entire market cycles, because the fear selling temporarily disconnects price from the fundamental macro driver. The low in March 2020, the actual day the market bottomed, was the single most fear-saturated moment of that entire year. Oil had gone negative. Pandemic headlines were at their worst. And that was the day that produced the entry point for the 1,600% Bitcoin move that followed. I am not predicting that today is an exact replica of March 2020. What I am saying is that the pattern of fear-driven selling into strong macro liquidity expansion is the historical setup that has preceded every major crypto bull run, and that pattern is active right now. Here is the conviction anchor for this video, and I want to be direct with you about what the data says versus what sentiment says, because they are pointing in very different directions right now, and one of them is going to be right. Sentiment says lower. Twitter sentiment is bearish. The majority of crypto content is either doom or false hopium. Retail is absent. The accounts that were posting every day at the peak are quiet. And when retail is absent, when the people who buy at tops because they see everyone else buying are not here, that is historically one of the most reliable contrarian signals of a market bottom. Because retail does not lead, retail follows. Retail comes in after the move is already substantially underway. The people who profit from the move are the ones positioned before retail returns. And retail returns when the price has already moved enough to generate new headlines, new FOMO, and new reasons to buy at higher prices. The data says the monthly RSI on XRP is at a level consistent with a bottomed asset. The weekly RSI on total market cap is at the lowest reading since mid-2022. Global M2 is at all-time highs and expanding at the fastest pace since the COVID stimulus era. Fidelity says M2 acceleration is the most reliable Bitcoin bull cycle indicator in existence. The 2016 liquidity expansion produced a bull run. The 2020 liquidity expansion produced a bull run. The 2026 liquidity expansion is running right now. Every single one of those data points is public, documented, and verifiable. The bear case requires liquidity to reverse. It requires global central banks, China, the EU, the US, India, South Korea, to simultaneously pivot from expansion to contraction. That is not what the current data shows. That is not the direction any of those central banks is currently moving. The destination is not uncertain, only the exact timing is uncertain. And the investors positioned before the move do not need to know the exact day. They need to hold conviction through the noise until the structure resolves. Something crazy is happening in the global financial system right now. It is not the war. It is not the oil price. It is not the fear headlines. It is that global M2 is expanding at rates not seen since the cycle that produced the largest Bitcoin bull run in history. While retail investors are absent, while sentiment is at extremes of fear, while the chart structure is compressed to levels historically consistent with major bottoms across every time frame. That combination does not guarantee a bull run. Nothing guarantees anything in markets. But every prior time this specific combination appeared, the resolution was an expansion, not a further collapse. The boring, quiet, fearful moments are where positioning happens. The loud, exciting FOMO moments are where the positioning gets sold to retail. This is the boring moment, and you just watched the entire video, which means you now have the framework that most retail investors will not understand until the move is already done. If this gave you clarity, do me one favor right now, smash the like button. It takes 1 second, and it genuinely helps this content reach the people who need it most. And if you are not subscribed yet, hit subscribe and turn on the bell, because when the total market cap breaks above $2.54 trillion with a daily candle close, I will have the full live breakdown for you the moment it happens, and you do not want to miss that video. Share this with one person in your life who is letting fear headlines drive their decisions right now. This video is the calm, data-driven read they need. I will see you in the next one.